Will the Fed's next move be higher
I can't take it.
or lower? Hi, everyone. I'm Marc Lichtenfeld, Chief Income Strategist of the Oxford Club. Welcome to State of the Market. It seems like a slam dunk that the next time the Fed changes interest rates, it'll be lower, right?
Just do it!
Inflation has come way down. The most recent reading was 3.2%, which is actually below the historical average of 3.4%. Now, last week, I showed Oxford Club members who joined me in the club room that the Fed funds futures market predicted a close to 0% probability of a rate hike in the next year, while predicting that later in 2024, a rate cut is a near certainty. Markets, like futures, are often good predictors of future events, though they're hardly perfect. But this market has clearly made its point that rates are going lower next year.
Things are going to be okay.
Interestingly, when I asked the more than 900 Oxford Club members that joined me in the club room, 2/3 said they believed rates were going lower, but 1/3 said the Fed's next move would be higher. That's an enormous difference from what the futures market is expecting. As for me, I think rates could go lower next year, though I wouldn't be shocked if we get 1 or 2 more increases if inflation picks up again. Right now, falling oil prices have been a big help in cooling inflation. But as I explained in my last State of the Market video, I expect a hot holiday season, and I'm not talking about climate change.
But the water levels are rising.
Because of how many fish there are.
No, the fish are actually dying.
They're drowning.
No.
I mean spending. If oil prices rebound and spending is strong, we could see another uptick in inflation. Now, keep in mind, Fed Chair Jerome Powell wants to be a superhero.
I'm Batman.
No, not that superhero. Or that one. I'm talking about this one. That's Paul Volcker, the Fed chair brought in by President Carter and retained by President Reagan to tame inflation. And like an economic Gunther Gable Williams, he did. Inflation fell from a peak of 14.8% in 1980 to below 3%. Volcker raised the Fed funds rate to a whopping 20% in June 1981. Today, it's in a range of 5.25% to 5.5%, but that's up from zero as recently as early 2022. Jay Powell has made it very clear he will fight inflation until the job is done. Once it is done, I expect rates to stabilize for a while, and then if there are signs of recession without inflation, the Fed to act decisively again and lower rates.
But you have to believe.
In an age of participation trophies, the government doesn't like anyone to feel bad, and recessions feel icky. So look for rate cuts if recession starts to rear its ugly head. The way to play all of this is with bonds. Even if we get 1 or 2 more ticks higher in rates, I suspect stable and eventually lower rates will generate strong returns on bonds with none of the risk of stocks. I especially like investment grade corporates that are rated BBB-, the lowest investment grade rating, because they are investment grade. These are still incredibly safe bonds and offer strong returns, in some cases upward of 7% per year. Stable or lower rates should also be good for the stock market. So start making your shopping list now for the stocks you want to own in 2024. I'll have more on which stocks you should be looking at in future videos. We're also holding a free training next week on how to build a Fed-proof portfolio. Click the link in the description to get the details. Thanks for watching State of the Market. I'm Marc Lichtenfeld. I'll see you next time.